Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, we are very pleased you have joined us for our next live presentation from Stillwater Critical Minerals. Please note, you can submit questions in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Michael Rowley, President, CEO, and Director of Stillwater Critical Minerals, which trades on the OTCQB venture market under the symbol PGEZF, and also on the TSXV under the symbol PGE. Welcome, Michael.
Thank you. Glad to be here. Glad to be presenting Stillwater Critical Minerals. My name is Michael Rowley, CEO, and we are pursuing the future of critical mineral supply in the U.S., as you'll see in following slides here. That was a forward-looking statement, and I'm sure I'll be making additional forward-looking statements. The vision here is for large-scale and low-carbon critical mineral supply in the U.S. to build that domestic supply chain. We're very well positioned in a district that's been producing critical minerals since before they were critical, and all of this is done to advance low-carbon supply. We're on a very short list of projects that have truly world-class geology, significant existing resources, and then demonstrated scale and grade and expansion potential, and all of that key point within an active and expanding U.S. mining district. All of that attracted Glencore earlier this year. This was a major endorsement from a major mining company. They took a 9.9% equity position in the company for a 52% premium to market price. $4.94 million Canadian invested, and there's a further warrant in addition to that that would bring $5.2 million in an additional tranche. They basically embraced everything I related in the earlier slide, and we're very glad to have them on board. A key point to all of this is that we are increasingly seeing majors like Glencore do investments of this type, and this reflects majors supporting juniors in a friendly manner, not requiring project deals, but instead making an equity position, growing with us, getting a front row seat in developments, and we're very glad to bring them in. Of course, they're a world-class miner, and their contributions in a technical capacity have been appreciated. Summary of today's presentation. We're going to do an overview. We talked about the Glencore investment. Want to talk a bit about timing. Not only market timing, but also our project stage, our timing within the broader market. Critical minerals, what are they? Why domestic supply? Why the reshoring or onshoring of the domestic supply chain? And then, of course, our company. We have the asset, we have the team, and we're very well located. You've got a teaser picture there of Corp and of the drill in action, and I'm happy to share some further insights from this morning's news release on our 2023 expansion drill campaign. So on the subject of timing, this slide presents stocks versus commodities, essentially. Commodities here are measured by the Goldman Sachs Commodity Index. It's a broad basket, gold, metals, I think oil and gas are in there as well. And stocks are measured by the S&P 500. And what we see from 1901 through to 2023 is these wide swings in the relative value of the two. So when that peak is high on this chart, commodities are very overvalued. When they're low, commodities are very undervalued. The point of this chart is that we're at a time when stocks are very highly valued and commodities are relatively very undervalued. Even to return to the mean would require the step up that you see at the end here in the dotted line. This looks like bottom to us. We're encouraging investors to look at commodities, and it's interesting to us that major banks are as well. And we see this as we tour the U.S. in particular, money coming out of the big boards, out of real estate, out of other places and into commodities. So what about project stage? For those that don't know, we're not actually a mining company. We're not mining anything. We're the startups of the mining industry. We're the ones that de-risk projects and then pass them on to majors. We're not usually the ones that actually mine them ourselves. This chart, called the Lassonde curve, does a really good job of relating how value is created in the mining industry. On the far left of the curve, you've got the discovery phase. Value increases. Value here is measured by share price. At some point, it peaks, and the retail, more speculative crowd gives over to the more institutional investors, and you begin the rather dry process of mapping out a mine, feasibility studies and such, until ultimately the true value is revealed in production at the far right hand of the screen. That creates a speculative hump in the middle here. We've put ourselves off of the discovery phase and beginning the resource phase. We've now put our second resource out at Stillwater. We see very good ways to grow that, and we have the team to do it. So we expect to move up that value curve, continue to work with people like Glencore, and look to reveal the ultimate value. Final point on this slide is that this entire curve is compressing and expanding based on market sentiment. And we're at a point right now where it's squished very flat. Volumes in the mining space in general, especially in the junior mining space, have been at historic lows. And that has compressed this curve significantly. As the saying goes, a rising tide floats all boats, and there's a lot to be done simply in that regard as we move forward here. We think we've seen that with the recent gold price move and breakout and return of interest to commodities. So timing in terms of mining in the US and specifically critical minerals, the US Department of Energy created this criticality matrix. This is how they prioritize their investments and urge the country to secure domestic supply chains. This all comes out of the recognition that China controls the majority of the world's critical minerals, whether they're mined in Africa or Indonesia. A lot of them are processed or owned by China. Russia happens to be the biggest nickel sulfide producer, and that is, of course, a concern. The US has literally one nickel mine, and we'll touch on it in a minute here. It's a small mine, it's a nice mine, but it's only one. We are focused on 9 of the commodities that have been identified as critical by the US government. We've already secured government funding, and we're looking at much larger sums as well. The US is increasingly funding projects in mining, and especially the ones in the pink here, in the upper right-hand section that have been identified as critical to the economy and security. Okay, so commodity outlook. This chart is a little messy, but that black dot there basically anchors copper, nickel, and cobalt price at the current price. And the dotted lines project from there where it might go in the next, 20 years. Nickel is projected to go up almost threefold from its current price. Cobalt goes up sevenfold and then falls back to something like 50% above its current price. This is driven by the chart on the right, where we see rapidly increasing demand for battery metals, especially nickel, as shown in blue. We're focusing on nickel because it is our primary commodity at Stillwater. We have an excellent management and board. Myself, I've been in the mining industry since 1990. Greg Johnson at the top right there is founder of Nova Gold, and us and the other metallic group companies are basically following that playbook. District scale acquisition during the bear market in a good district beside a good deposit, and then build it out. 2 names I need to call out, Danny Grobler, Albie Britz here. We got them from Ivanhoe just last year. You'll hear the Ivanhoe and Platte Reef name later in the presentation. Can't understate the importance enough of bringing their former chief geologist over to us to advance similar rocks in Montana. Nora Pincus joined the board just a couple of months ago. She is a well-known mine lawyer and mine financier, and it's been a wonderful addition. Dr. Wolfgang Meyer is a global expert in these ultramafic systems, and Gordon Toll is a builder of very large mines. We have a team that's well equipped to advance this. The technical team is excellent. Glencore, of course, USGS, we've been partnered with them for 6 years now. This is the US Geological Survey. The middle 2 names, ARCA and Cornell, are pursuing carbon sequestration with us at Stillwater. This is very real as a way to further reduce the carbon footprint and even go for a negative carbon footprint on an ultramafic style mine. Stillwater's projects. We have 3 district scale assets. The focus very much in Montana. That's where the 1.6 billion pounds of battery metals, 3.8 million ounce precious metals and gold, including gold. We do have a gold project in Ontario, and that is subject to an earn-in by a new listing called Heritage Mining. In the Yukon, we have a district scale critical minerals project, earlier stage than Montana, but we like what we see there, and actually we've got some interesting developments coming there. We have 2 other projects as well. We have a back-in on a past producing mine in BC called the Yankee Dundee. That's shown in our financials. And we have the Duke Island project in Alaska. That's a smaller critical minerals project. Both of these are starting to get some attention lately as well. There's our resource statement. This is our second resource on the project. First was October 2021. With a modest drill program, we were able to significantly increase it, 62% increase, and announced that earlier this year. This is the 1.64 billion pounds of battery metals, 3.8 million ounces in that top line base case. This is $77 US per ton gross value of the rock. That gives a lot of room for mining method, and we're very pleased with that gross valuation. In the high grade scenario, in the bottom case, smaller operation, but the rock is now over $200 US per ton gross value. That would support a variety of more selective mining operations. So we're very pleased with the optionality we have there. We have low discovery costs, which speaks to the well mineralized nature of the district. And of course, we just drilled this year to expand these resources, and we're looking forward to delivering an updated resource as fast as we can in 2024. One thing that gets lost a bit in the market is that we are primarily a nickel project, and that's really the point of this slide. We have 1 billion pounds of nickel, 46% of the resource by value. This is in a district that's currently known for palladium and platinum. So there's an aspect of education that we're doing here to show that we really are 2/3 battery metals, significant copper, cobalt contribution, in addition to the PGEs that the district is known for since 1986. How does this look in the US nickel supply scene? Let's have a look at our peers and comparables that are in active mining districts in the US. That base case scenario of ours is on the right-hand side. Next to that, the higher grade scenario, and at the far left is our truly high-grade scenario. Next to that is the Eagle Mine, run by Lundin Mining in Michigan. It's the only U.S. nickel mine currently. It's expected to be depleted in 2025, 2026. And at that point, it will have produced about 440 million pounds of nickel in total. The only project that's currently in line to replace it is the Tamarack project. This is run by Talon Metals. They're friends of ours. It's half owned by Rio Tinto. Projected start is 2027. And they're right in the same sort of size with 481 million pounds of nickel in total. We already are larger than both of these projects combined, and we're also in an active and currently expanding nickel district, which is a mining district, which is a key point. Have a look at that district. This is Montana. This is the Stillwater River in Montana. In the bottom right, you've got the current Stillwater mill run by Sibanye-Stillwater, our neighbor. And our core shack is called out in the yellow box there in the background. On the left-hand side, you've got the Mountain View mine, which is a historic chromium mine. Very interesting to note that the US government subsidized chrome production here during the war years. Key point about this district, this is a place where the government recognizes critical mineral supply and has even accelerated that historically. Our deposits and also our neighbors' deposits and their other mine are located down and to the left. And you'll see in the next picture, which goes to a plan view, we were just, that picture was taken at the Stillwater mine, shown sort of midway on the right there. They have an additional mine on that same deposit, the Blitz, and then to the left, to the west, they have the East Boulder mine. They're running 3 mines on the same deposit. The deposit is a monster. It's the JM Reef. It is a 1.8 meter thick, 40 kilometer wide at surface, It's one layer of the magmatic horizon, and that's a key point here. We share with them the layered magmatic stratigraphy of the Stillwater igneous complex. It's very rare for Junior to be in a position like this. Our claims are shown in yellow, theirs are in gray. It is us and them, a $4 billion mining giant and a company with a market cap of 35 million Canadian at present. We are focused on the lower Stillwater complex, and those large chunky claim blocks of ours reflect that. They have the reef deposit in the upper part of the system, that layered system. We have the entire lower portion, and we're bringing in those Platte Reef models based on the bushveld of South Africa, which is known to parallel the Stillwater complex. This is the setting for Ivanhoe's Platte Reef mine, and also Anglo American's Mahalaquena mine, giant nickel copper PGE mines in South Africa. And that's why it's so significant that we brought over Danny Grobler and Albie Britz from Ivanhoe's Platte Reef operation. The JM Reef deposit, currently mined by our neighbor, is about 100 million ounces of the highest grade palladium platinum in the world. Majority of that in current resources. I'm also including the more than 15 million ounces they've mined to date. It's a thing of beauty, and it speaks to how well mineralized this district is. It's also got excellent infrastructure, and if you think about it, our biggest deposits are only about 2 kilometers from a current mining operation, that East Boulder mine run by my neighbor. So what's the significance of the term Platte Reef? Platte Reef is a district on the bushveld complex of South Africa. Anglo American's Mahalaquena mine has been running there since 1993. It's an absolute behemoth, and it's a very highly profitable mine. 10 billion pounds of nickel, 5 billion pounds of copper, 152 million ounces of platinum group elements and gold. It is a pit operation. Like us, mineralization starts at surface. We also have the optionality to an underground mining method in Montana, and that's something that Ivanhoe is pursuing immediately adjacent to Mahalaquena on the Platte Reef. 6 billion pounds of nickel, 3 billion pounds copper, and 95 million ounces of PGEs. This is the only technical slide in the deck, I promise. It's rather busy. It takes a close look at that main claim block and the 12-kilometer area that we've focused on to date. In yellow, you have the block models that are the 1.6 billion pounds, 3.8 million ounces. It's actually 5 deposits, as you can see here, named DR Hybrid, CZ, Central, HGR, and Crescent. Those are spread across 9 kilometers of this well-mineralized and underexplored system. They're connected by those very lovely chargeability anomalies shown in pink and the conductivity anomalies shown in blue, literally the conductivity of the rock and the chargeability of the rock. These are indicative of very large bodies of sulfide mineralization, and it's a thing of beauty that our deposits happen to be set in these. The deposits are open laterally to each other, they're open to depth, they're open in every direction. We drilled off of the west end there, where that arrow shows, just to the west end really of the DR Hybrid. And that was some of the updates that we gave today. We drilled 6 holes off the west end that we expect will give us a really nice resource expansion as fast as we can get the assays in and work the numbers up. We're drilling in the area of that number 1 drill hit, 13.2 meters at 2.3% nickel, plus about 1% in other values. And that's about 9 kilometers away from similar hits at HGR. This is a very big and very well mineralized system. All of those hits occur within wider widths of lower grade mineralization. If you read today's news release, you'll see we're excited that we've not only confirmed that Platte Reef and the general layered nature of the system, but we're now adding these cross-cutting structures to that are not part of the Platte Reef model. And that's what we mapped and drilled this year, and we're excited to bring in that additional. The layer that's shown on top is the metals in soils. It is literally the level of metals in soils taken on the surface. large number of very high level anomalies that have never been drill tested. And this is very exciting to us because it's basically giving an indication of what's in the rocks beneath the surface. A lot of room for this to grow in terms of both grade and scale. Some teaser pictures. I see I'm at 20 minutes here, so I'll keep it moving. This is the drill at Chrome Mountain earlier this year in the area of that 13-meter hit of such nice multi-percent level grade. You've got a picture of hole 4, which returned a wide interval showing lots of sulfide. The sulfide in these pictures is sort of the golden colors. This is nickel sulfide, pentlandite, copper sulfide, chalcopyrite, and also pyrrhotite, iron sulfides. These all contribute to that nice coloring. Assays are pending on all those hits. In the top picture, hole 4, this is now the N3 structure. I mentioned those cross-cutting structures. We identified N1 previously. That is the hit shown by hole 2105. This year we added N2 and N3 around that, and that's a very exciting revelation for us. The mineralization shown in hole 5 here is in fact the first test ever of a 12-kilometer long electromagnetic geophysical anomaly, and we're seeing very good nickel and copper mineralization in that sulfide mineralization. And this hole 6 shown here, we're presenting about 7-meter intercept in this picture, but really it's part of a broader 24-meter interval that looks compelling. Again, with that brown sulfide mineralization. This is another test of that same massive electromagnetic anomaly. We're very excited. We're looking forward to bringing updated pictures out as we get assay results and update our models and figures accordingly. And there's a picture, drone shot of the drill and the country there with the road in the background. There are roads all over the property from past operations, which makes it very easy for us to operate there. I'll start to wrap up the presentation. We've been at it for 6 years on the ground. We've drilled 4 programs, delivered 2 resources, and brought in key people from Ivanhoe, and then most recently, Glencore. We're very pleased with the setup here, and especially with the backdrop of what's happening with the price of gold and the returned interest in junior resource stocks, growth stage resource stocks. What's next for us in terms of catalysts? 2023 drill results. We're very excited to get those assays, release them to market, and update our figures and models accordingly. Our partner in Ontario, Heritage Mining, is doing great work. They're drilling. They've put out some results. They've got more coming. We're looking for updates on our other non-core assets as well, especially the Kalani project, also possibly other ones. And then that resource update. At some point, I think it may be early Q2 at this point. We don't know. We have to get the assays in and spin the models, but there's definitely a resource update on the horizon. Capital structure, the share price shown on the green line there. We've taken our lumps like the rest of the sector. This year we were looking for the gold price to jump even back in January. Didn't really happen. It's happening now. The capital basically went to the US dollar in particular, and can't argue with that. There were 5% returns to be had. Our sector, many other sectors suffered as a result of that. Nonetheless, we're here. I believe the bottom is in. If you look at the insider filings I've been buying, we're tracking broadly the industrial metals ETF and also, frankly, the Canadian exchange here, which is a good proxy for junior mining since these stocks dominate the exchange. The key point is we believe the bottom is in, and it's a good time to look at a number of junior mining stocks. The majors are certainly looking at us, and they're starting to write checks. We've distinguished ourselves by bringing a major in as a backer, and I think that's an important stamp of validation. It also means we've got millions in the bank, and we don't need to do dilutive placements. Our market cap sitting about 33 million Canadian, which is crazy given we have perhaps 20 billion of gross metal value in the ground. And it's a resource that the US government increasingly wants to get out of the ground and into consumer use to restore that domestic supply chain. Management insiders hold 20%. Glencore, of course, about 10%. Institutional investors, including U.S. gold, are a good 25% in there. That's it from me. I will gladly take some questions. First up, what attracted Glencore to the project? It was driven primarily by the nickel sulfide. The nickel market is, of course, driven by nickel laterites, primarily from Indonesia, primarily under China's control. High quality nickel sulfide in a producing district in the US is very compelling. And Glencore, also another party who were alongside Glencore, were very keen, and we passed their test in the core shack quite easy, and it's been a good collaboration since then. So it was largely the nickel sulfide. It is also the polymetallic nature of the deposit, and Glencore has been quite clear that they value the other elements in there as well. Question concerning government funding. Can we please elaborate? We have a DOE grant, Department of Energy grant, in place for the carbon sequestration work with Cornell University. We are ongoing and ramping up with the U.S. Geological Survey. That's been in place for years, and they've been wonderful partners. We have several proposals in there as well under the Earth MRI program that you may have heard of. I believe the budget for that is $72 million US per year. We are also pursuing other initiatives as well, and if you're watching the critical mineral space, you've seen the DoD make some grant funding, typically tens of millions of dollars, to build that U.S. supply chain for exactly these commodities. So we are indeed looking at those. Catalyst for revaluation of Stillwater. Its drill results, its resources, its continued engagement with USGS and Glencore. It's frankly the market coming around again, because the whole sector is bombed out, is the word that I've heard a lot. And that's why I would encourage folks to look at any number of quality junior mining stocks right now. The valuations are absurdly low, and there really is not much downside left, especially if you're investing in a company with a major on board that you can reasonably expect is not going to run out of gas. I'm sorry, I'm just going down the list here. Specific question about, is the Talon U.S. grant structure what we'd be looking for? Yes, that does seem to be the channel that the government prefers, and that would work very nicely for us, that DPA Title III route that they went. That, I believe, ties into the next question. Will you receive any grant funding? We are, as I mentioned, and we are indeed looking for more. When are we expecting assays? The turnaround time in the lab, we only recently got the last core cut and off the lab, so I would expect assays to be weeks out and into January of next year as well. How many years of nickel mining at best? I assume that means in our current deposits. We're seeing that 10 to 20 year mine life now, just in the current deposits. And obviously there's a lot of questions there around what mine method and such. But that's the critical number that you need to really start to think of a PEA. So you'll see us start to wrap some bigger studies around this now. We will always be drilling to expand. To be clear, we've got terrific expansion potential. But we're now in a place to start thinking about mine life and such. How much cash does the company currently have? Can we drill in winter? We choose not to drill in winter. It gets very expensive, basically. So we like our June through November sort of window, recognizing that the snow flies and the wind blows. And we're sitting about 3.4 million cash and cash equivalents, as covered in that slide back there. I'm about 50 seconds left here. Thoughts on the pace of M&A in the junior mining space over the next year? It'll pick up rapidly. In the bear market, the majors aren't writing checks and they're dropping assets like Stillwater. Now we're at a point where they start writing checks to engage and support and learn more. At some point, they simply start to take these things out because they've been depleting pounds and ounces without replacing them. It is our job to do exactly that. we're the ones that de-risk and bring these things to the table. We simply don't want to sell out too cheap, and we need to advance something to a point that it passes the test of a major. I definitely see M&A accelerating in the next year, and I look forward to further discussions with Glencore and others in the industry. That's a wrap. I'm a little bit over time. Thank you all for presenting, and please do reach out for more information.